Hey, CJ Moss with Empower Lending here. It is May 10th, 2023, and I wanted to give you a quick update on interest rates, what we're seeing today, and where we think they are headed. So, today was a pretty big news announcement day. It was anticipated for a couple months now. As we have talked about before, what we have been seeing with interest rates is that they are pretty much directly tied right now with inflation. So a lot of people see the Fed increasing interest rates and assume that mortgage interest rates are doing the same. That has not been the case. Those are not correlated, loosely correlated, but we have not been seeing the Fed increasing interest rates hurting mortgage interest rates. So like I said, it's really been following inflation and what has been happening there. And it have consumer price index, which is a popular measure of inflation, came out today, May 10th, and it was positive news. So both month over month inflation and year over year inflation decreased, and because of that, the mortgage-backed security market, which is where interest rates are pulled from, reacted positively. So we have seen good movement. We are starting to see rates drip down a little bit, kind of that low 6, upper 5 range, depending on how everything is structured. And there is a lot of anticipation, and people feel like because of rates being so closely tied with inflation that there could be some good news coming for the summer and lower interest rates. And I want to show you kind of where we're pulling that information from and why we feel that way. So what we're looking at here, this is just a graph that is measuring year over year inflation. So you can see here on this graph, each month is a monthly inflation reading that goes into the year over year, and it spits out an average inflation reading. So really, if we look in this area right here, let me move my mouse over to it, the April, May, June, even August and September, right? You can see that there are some pretty high inflation readings here. For example, we just replaced this April one. It came in at 0.37. It's almost half month over month inflation. And reason why rates are anticipated to hopefully get, fives, fours by summer to end of this year is because of these next few months and the readings that we're going to be replacing. So most likely not only will month over month inflation come down, but year over year will come down because we are replacing with lower readings. And so that is the optimism for interest rates. Now, what does that mean for the housing market, right? As you guys know, it has been there isn't a ton of inventory, right? And there are still some homes that are going multiple offers above asking. Unfortunately, I don't think that is going to be helped by lower interest rates, right? So what we're seeing on the data that we're looking at is somewhere in the neighborhood of 700 to 1.2 million people in the United States are waiting for interest rates to drop to start entering the housing market and to start, looking at purchasing. So obviously with low inventory, that's going to be exacerbated, right? So if you do have clients that are looking, or maybe you yourself are holding off, waiting for rates to drop, I'd really recommend doing that before these next few months, before we start to get another inflation reading. Interest rates come down even further, and more buyers flood that market, right? Because we've already seen this once, right? In 2020, 2021, when interest rates were low, you saw what happened to housing prices, you saw what happened to inventory. So really important that if anyone you're talking to is sitting on the sideline, feel free to show them this video or have them reach out to me, and I can kind of run them through. Really not an emotional based decision. There's some facts that are pointing towards this that I feel like are important to know if you are considering looking at buying a house, or you know someone who is, in the next year or so. So that is it for the week. We'll talk next week. Thanks.